Alright guys, so here is, let me go over the SPY because that's what we were crushing this week. Let me just go over real quick. Again, you have a drop, base, drop, base, drop. So we already have two levels of supply here that I just said based on the number of bases. And judging by how there's no cluster around these bases, these are very high quality short spots in the market. So again, here is a drop base drop imbalance right here, and again you can take it from the body of the candle here or the wick low. It's all very subjective, but I usually go to the body here, and then you would just take your tool and extend it from here to the wick highs for your risk. And here is another short that I posted on my public Twitter right here. And again, I can draw from you get the drop, the base, the drop. If this base right here is massive supply, which is why we got that sell-off. Why? Because it caused a continuation gap down. So much supply to gap the market down. From so much supply here to gap the market down from 314 all the way down to 305. So I would draw it again from either the wick low or the body of the candle. I like to have better entry, so I draw it from the body here to the highs, and look at what happened. You get the sell-off, and then you get the relief rally into supply here for them to fill more sales. And the wick represents orders hitting the markets, which is why we got that sweet sell from 314 all the way down to almost 300. So nearly 14 SPY points, which is pretty massive. That's 140 SPX points. So now I'm going to go over some fresh levels that the market has not traded inside yet. All right. Here are some fresh levels that the market has not traded inside yet. So I'll tell you right now, here are some. So this is how I basically scalp intraday. Is here you get a drop, base, drop. I know that there is a lot of supply here because this supply here right here caused the market to gap down pretty large. So I would look to take a short trade in this supply, and what I would do is I would look at the candle before the gap down. So in this instance, since this is the SPY and it doesn't show extended hours, you can picture this sell right here as a big red candle. So like this. So basically like this. So you would draw like this. So what I would do is I would take the bullish candle prior to the sell, and I would draw it at the opening of here, at the open of that bullish candle, and then I would take it to the highs up here. So what I did was I just drew in this red engulfing because it's the same thing. This supply here caused the market to gap down large. So that's why I use the opening of this candle right here. So that's why I'm using the open of this bullish candle right here. So I would look to take a short trade in this level here. So let's say that the market does gap up on Monday. I would look to short this level here, but I would target demand below us. Look at the structure that formed here. You have a little drop, base, and a rally, right? So one of two things here. I would look at scalping longs. So again, I will look to short this if we gap up into supply here, and I would look to target this demand. So this is just one scenario, okay? So if we gap up here, I would look to short that area, and I would look for it to sell down to the next demand, which is this level right here. So this would be my target area. Well, it'd be a little bit before the demand. I always like to front run the level, so I would probably look at closing out shorts around 294. But ultimately, I would expect price to bounce a little bit when it enters this level of demand here, because this is a valid imbalance and it's fresh. Or another scenario I would look to do is I would look to get long if the market were to gap down into demand. I would look to get long here, and I would look to get long and target. I would look to target the opposing supply zone up here, and then from there, we most likely would sell lower. So this is just like an example of how I would day trade this. I'm just showing you guys how I would draw my imbalances. I mean, look, there's another supply here. Remember, if you just imagine this as being a big red engulfing candle like this, then you could do the same thing. You would take the opening of the last bullish candle prior to the drop, rally base drop. You would draw it from the opening candle here, and then you would draw it from to the highs. And remember, I like to focus on fresh levels, on fresh zones. So, this is a valid short up here. This is a fresh, I would look to short this. And if the market did scam its way up to this fresh supply, I would look to short this as well. That's a fresh level. So I hope that this helped you guys out a little bit. This is basically how I trade the markets. I mean, of course, supply or demand can be gapped up or down into. So for example, here, you guys can see here that demand got gapped below. So here's an example of a rally. Oops, wrong button. This is a rally, and then you get this little basing area here, rally, base, rally. So the idea is I would look to get long right here for a bounce. Whoops, let me draw my box. So we know that this is a rally-based rally imbalance. So obviously, by our rules, we want to look to take fresh levels of demand, right? So ideally, we would want price to go here, and then we would look to get long, right? But look what happened. They actually got price down well below demand. So the opening price of this red candle was 325. Look at what they did right here on February 24. You guys see what they did here? They actually gapped the market below demand, right? So this demand right here, this turns into a flip zone, and this turns into supply. You see how they opened it below the open of this candle? So this is the demand imbalance right here. But because price opened below it, look at what happens. It opens below it, and it tests demand turned to supply because they did not open it above that level. And it continues to sell down. So again, the levels can be gapped above or below. That's why it's important to just be aware of that, about how these levels turned into flip zones. So that's just an example of supply being turned to demand, just like how support can be turned into resistance. But I like trading this style. I mean, here's some more levels. This is a massive level of supply at 333, because remember, if you take your imaginary rectangle tool and you draw yourself a big red candle, if that helps for your eyes, well, obviously we know that there is mass supply at 333, enough to cause a monster gap down in price. Big level of supply here. So if the market ever does make its way up to this level, I will be looking to take a large short position for sell. Well, I hope this helped you guys out a lot. Well, before I go, sorry, I like to, here's another. Guys, these are all very, very, very scalpable levels. I mean, rally, base, rally. I mean, it's pretty bright as day. Get the rally, you get the base, you get the rally, and then you get the market to sell back into demand. Again, this is not a quality demand zone, but it's enough to get a, from, let's see, it pulled into demand here. It's enough to get a 6-point buy scalp, which is pretty large. So this is a sweet method if you love the day trade, and if you love the swing trade, you just want to focus on levels of demand and supply that are formed by pivot highs and pivot lows. But if you're day trading, you can day trade this stuff all day long. I mean, here was the long call that I made last week. Here's a drop base rally that we took in the group, I believe, and look at what happened. You take the open of the here, and it hit almost to the penny. So here is a drop base rally, demand zone right here. The market sells off into demand, causing the rally last week, and then we get a huge rally up. So knowing that, I would imagine that the market will do one of two things. We will either gap down into demand here and do one of these. We'll hit demand here, and then we'll make our way up to supply up here before continuing the move down. Or we will gap up into supply, make our way to supply, and then back to demand. This space in between, this is called no man's land, which I refer to because this is in between two imbalances. So this is just a big game of patience, but it is a very high probable way of trading if you love to day trade or swing trade. This is why I always say, there's nothing to do, because this area is called no man's land. And it's as easy as setting alerts before these imbalances. So I'll simply wait for price to enter this level of supply to short, or I'll wait for it to enter this level of demand to get long. So I hope this helped you guys out. Again, feel free to DM me. It could take a little bit before I can reply, obviously. Okay, sorry, I have to say this again. Here's another one, guys. Rally, base, rally. The stuff just works. Open of the candle down here, and then you get the sell into demand for a sweet move back up into supply, and you could have scalped that as well. So I hope you guys are enjoying my content so far, and I hope you guys are most importantly making money. But even more important than that, I am trying to teach you guys a system that just simply works. I'll do another video later how I incorporate wave theory into my levels. I basically use wave theory to gauge market direction, and I use it to put me on the right side of the trade. So I will save that for another video, but I hope that this guys helps you guys out, and you guys can start following along more easily, and you guys can read my charts, so we can all be on the same page.